Diversification power to supersize you. Sharon Horne-Ellstrom here. Welcome to day 83 of our Supersize You Annual Challenge. And today, our topic with respect to financial health and well-being, because we're focusing on finances this month as part of this year's annual challenge, is diversification. Diversification of our assets and our investments. We want to make sure, just like diversity in our organizations and in the communities that we live in, we want to make sure there's diversity and diversification across different types of assets that we invest in to plan for, example, our retirement. Yesterday, we talked about that. Well, how do you go about doing that? It's pretty easy nowadays. With the internet and everything and access to information to decide what type of investments are best for us, best for you, best for me. As we age, as we have different and go through different stages of our life, different types of investments and a different investment strategy makes more sense. So for example, when I was younger, I invested in a lot of high risk, high yield type things, stocks, bonds, not so many bonds, but stocks. But there's index funds and there's all kinds of tools now that are available that were never available to the average person, the average Joe like me before. And now, with information being readily available, online trading platforms and things, it's really easy to spread out the risk of the things that you're investing in. I will give you an example of why this is important. Prior to 2008, the market crash of 2008, 2009, that time frame, real estate blew up, right? And back then, I and my now ex-husband had all of our money invested in the stock market. Well, if you've been around for a while, and if you were around then, you may be aware that stocks tanked, especially in certain sectors during that time frame. And even though we were diversified across various sectors, the vast majority of our assets and the growth that we were doing for that stage of our life was in the stock market. And it wasn't diversified enough to protect us. We literally lost millions of dollars and I'm divorced, but rebuilding my retirement funds because of that. And that was the biggest lesson I've learned as far as what do we invest in? What do we put our assets in? What kind of assets do we acquire in order to build and grow and create the life that we want? And someday, hopefully, retire, right? Some of us want to retire. Some of us don't. I don't really ever want to retire. So how do you go about doing that? First and foremost, you have to understand yourself. You have to know, how much risk am I willing to tolerate? What stage of my life am I in? Back then, we were young, we were raising our family. We could have our investments in more risky things, which at this time apparently was the stock market. And we can still have time then to rebuild that for our future, for the kids' educations, etc. But you want to diversify to reduce risk, right? If we had more property, maybe real estate, we were in real estate back then too, so maybe that wasn't the best thing to diversify into, but it actually ended up being the part that helped us, the nest egg part of, let's not put all of our eggs in one basket. Let's not invest solely in one thing. Another caveat is, if you own your own business, if you're working for yourself, or if you're building a business, I will contend the best investment you can ever make is in yourself and in becoming a better human and becoming a better person, thinking better, making faster decisions, learning about whatever skills are necessary for what it is that you want to achieve in your life. I contend communication skills are always something we should invest in, as well as, negotiating, understanding other people, things like that. So in ourselves, right? Mostly if we figure ourselves out, how we interact with other people will fall in line as well. We want to make sure that we think about this and have a plan for this, and that we review it once a year to make sure that the mix of what we're investing in is a good mix. Now, I will say, before I got married, I think I was doing a great job. I was doing a 15% into my retirement account and to investment accounts, 401ks and things. And then my company matched that. So 30% of my growth, which was pretty significant back then, at least compared to other people at the time, was going into some kind of an investment, savings, etc. And Yeah, it wasn't until after I got married that I didn't listen to myself and do what I should have been doing all along. So, action item today. What are we going to do? You are going to take a look at your investments or portfolios. And if you haven't done anything, now, today is the day to start, right? Even if it's $5 that you start setting aside and investing in different things to diversify and spread things out. I think I've shared the story that I think one of the competitive advantages I personally had working in corporate America was that I owned my own businesses on the side. So I was working in corporate, but I also had businesses. And of course, when you work for a big company, you have to declare all of the other business interests and things that you have. And there was never a conflict of interest. I never went into an industry that I had a business in. I know, there's just things you don't do as a good human being when you're working for somebody else, as well as having your own businesses. There are businesses, companies that will not hire you and allow you to have any outside interest or business. Even a network marketing business or something like that, they won't allow you to do that, which guess what? I would never work for one of those companies because I think that it's important that we take care of ourselves. I mean, if a company's going to guarantee you lifelong employment and a retirement plan that's beyond your possibility of creating on your own, maybe you would go to work for a company like that. But otherwise, I would say stay away because they're limiting who you can become and who wants to work for a company like that. Not me. So take a look at your portfolio. Make sure that the mix of different types of investments, and I mean across industries. So even the whole stock market pretty much tanked. So we were diversified across that and had index funds and all the things you're supposed to do. But the vast majority of our investments, like 90+%, were in the stock market. We had some real estate and some other things, but it was basically starting over. And that's okay. That happens. We both still had jobs. So no, I had left. I had my own business by then, and I had left corporate America. But we were fine. We were fine anyway. So look at that. Look at your diversification. Do you have stocks? Do you have some bonds? Do you have any real estate investments or in real estate? The difference between our home, and our home can be a way to save a nest egg, depending on where you live and all kinds of other factors, right? But generally, I do not consider my primary residence an asset. If I'm living there and I'm not doing anything to generate income off a property, it is a primary residence. It is where I live. It is in no way, shape, or form tax deductible, unless, of course, you have a home office and a home-based business, which I'm not getting into taxes. I farmed that out decades ago because the tax codes just got, my tax situation, the tax codes got super complicated, and I was never going to risk having another audit. And so I definitely hired the best CPA in the world. So today, what are we going to do? Share in the comments below if you have a diversified portfolio. And if you're willing to, share your percentage. Maybe share your age and then the percentage breakdown: stocks, bonds, real estate, crypto, jewels, gems, cars, fine art, whatever it is. Just a percentage of the amount that you have in your portfolio. That's not any secret information that anybody wouldn't want to share. You have to share amounts, just percentage. Yes, I have a diversified portfolio. Here's the breakdown of how I'm doing it right now. And I like you to share your age, because at 66, what I do and how I do and how much risk tolerance I have is very different than at 36 or 46. Probably kind of similar to 56, but you get the idea. All right, if I can help you with any way, obviously I am not an investment expert. I never claimed to be one, but I do know that there are great books and great resources and tons of information out there. And my secret personally is hire an investment expert that you absolutely positively 100% can trust. Do your homework, do your investigation. I have a relative, a very awesome, smart, amazing relative that does it for me so that I don't have to worry about it. All right, any questions? Hit me up. Otherwise, I will, of course, be with you tomorrow. Bye.